Welcome back to the UK Crypto Podcast. I'm Paula, and as always, I'm joined by Matty. This is the place where we cut through the noise and actually talk about what's really going on in crypto. Now, today's episode, this might sting a little bit because we're talking about a very simple question, but a very uncomfortable one. Are you actually investing in crypto? Or are you just entertaining yourself? Because there is a massive difference. And if you get this wrong, it can quietly cost you thousands without you even realising. So in this episode, we're going to break down the habits, the behaviours, and the warning signs that might reveal the truth about what you're really doing in this market. Right, let's get into it.
Sponsor of today's episode is the Crypto Wolfpack. It's an online community just for you, for people that are into crypto. Inside there, you've got daily live streams, education, and most importantly, a community. With doing crypto on your own can get lonely. Doing it as a team makes you more successful. If you're interested in joining, please head over to cryptowolfpack.co.uk or click on the link that's in the description. Right, let's get into it.
So I think the best place to start is to kind of be brutally honest about what people are actually doing when they enter crypto.
Yeah, totally. I mean, everybody wants to get into crypto. Let's get it straight. To make money.
Of course.
That is number one goal, to make money. The question is, are people being efficient enough to make money, or are they just entertaining themselves?
Yeah, because you enter crypto, don't you? And then you've got that constant checking the charts, checking the prices. And I think a lot of people spend a lot of hours doing that.
Yeah. And I think there's nothing wrong with that, as long as it's productive.
Yeah, exactly. And then there's this idea that people just jump between coins because they'll see something pump in and they'll buy that, and then they see something else pump in and then they swap out of that one and they buy the next one without really a plan as to what it looks like. It's just, let's buy something to be in the space.
Yeah, totally. Like almost like they feel like they need to be doing something, so they are doing something.
Yeah.
It's the same with when people are consuming content.
Yeah.
I mean, I think sometimes consuming too much content can be counterproductive, especially if it's all coming from different angles. I think it's quite good at the beginning, maybe potentially to maybe shoot your shot, see what's out there, see what fits with what you like. But if you're continually just taking in so much information from different angles, different perspectives, and it's all with different methods and different scenarios,
it conflicts each other.
It can be conflicting, and people can get confused, and therefore that can often translate in when they're looking at the charts in particular, or when they're making trades. All of a sudden it becomes very mixed, very muddled.
Yeah.
My advice always for people is actually try and simplify it. Slim it down a bit. Yeah.
Because just because you're feeling busy doesn't mean that you're improving your knowledge, doesn't mean you're improving your portfolio. 100%. It just means that you're busy.
Yeah, totally. I mean, and I think busy can be good.
Yeah.
The busy can be good. It's more about, is that busy productive?
Because you can be busy and not productive and not making anything, because just because you're busy buying a coin or just because you're busy making a trade does not mean that coin's going to appreciate, does not mean that you're going to be making money out of those trades. So I think it's really important that, yes, we want to be improving our knowledge base. Yes, we want to be growing our portfolio, but we also don't have to be in everything.
Yeah, completely. And I think there is that almost that FOMO, isn't there? And we talk about FOMO, about people FOMOing into trades, but I think sometimes there's going to be a FOMO just to do something, just to take anything, and they'll be like, oh, well, hang on, I haven't made a trade today. I need to put one on. Yeah. We don't need to put a trade on today.
If you don't, you
need to find the right trade.
Yeah,
and not just putting one on for the sake of it. And I think we do see a lot of that. There's a lot of that in crypto.
Yeah, there is huge amounts, because people have this worry that if they're not in the game, then they've missed this amazing big opportunity. But I think a lot of people get confused because there's always more than one opportunity to be in something. And it's difficult because you go on social media and you see the Lambo boys, or you see people talking about generational wealth, and there's this desire to be successful. And just because you're in something doesn't necessarily mean it's going to be successful. And I should imagine all of the people that have grown their portfolio to significant wealth have made mistakes along the way. So I think it's just part of a journey. But we can't just keep being in for the sake of being in.
You make a good point there, because most people that have made decent money in crypto, it's been done over a period of time.
Yeah.
I mean, yeah, of course, you're going to get some people that have just struck lucky. They bought something on day one. It's gone absolutely crazy.
Yeah.
They sold it, and then they've taken that money, they invested in somebody else, and that's also hit. That will happen. 2 moves, bang, done.
Yeah.
That's not the norm.
No.
Most people, they've done something over a period of time, over a cycle, multiple cycles.
Yeah.
But what I think a lot of new people into crypto don't realize is that it is about time in the game.
Yeah,
it is about just don't put too much pressure on, because about, like, I see people like tweaking their portfolios all the time. Like, they'll say, I'm buying something and this is a long-term hold. The market will go the wrong way and they'll sell it.
Yeah.
They've completely abandoned the strategy.
Yeah.
Purely because they're too busy tweaking. They've felt it go backwards and they've panicked.
Yeah.
And then it'll go back up again. Then they're kicking themselves. Then they're buying it back higher than what they sold it for. There's too much tweaking, too much tinkering. Sometimes you need to get yourself a strategy, relax, take your time. And if that strategy takes a year, 2 years, 4 years, 8 years, 10 years, it doesn't matter. It's okay.
Exactly. I think from the other side of things as well, yes, you've got the people with the long-term holds, but what you see a lot on social media is this idea of being a day trader, and I'm going to go and I'm going to do an hour's worth of work a day. I'm going to make 10 grand and I'm going to go off and live my best life. Mm-hmm. But I don't think that people often understand how much work it's got for a trader to have got to the point where they could only trade for an hour a day and make that kind of money, because it doesn't happen by luck. These guys will have made thousands of trades in the past, and they will have lost a considerable portion of those because
while they were
learning their skill.
100%.
So I think it's difficult because we kind of live in a society at the moment that everybody wants to be a part of everything, and everybody wants this growth and this progression. But we've got to also put that hard work in along the way to improve our knowledge base. Yeah,
I mean, and quite often as well, if you get people they're doing the tweaking, they're just putting trades on for the sake of it. There's very little thought process in it, but they're doing that. That isn't progression. That's just them trying to stimulate themselves.
Yeah.
And there is a massive difference between the two. I'm neurodivergent, as I've mentioned a million times on podcasts and all the rest of it. So I understand that need for stimulation, but you have to put it in check.
Yeah, because
you have to put it in check, because if you don't, it's going to cost you some money.
Yeah,
but you have to learn that.
Because crypto isn't just a dopamine hit, is it? That's the reality. Mm-hmm. Because yes, there is an element, and very often you hear people say, "Oh, trading is nothing more than just gambling." If you are literally using trading like gambling
then
for that dopamine hit,
then it is gambling in that situation.
Yeah,
it's no different to the guy stood in a pub at a fruit machine, whacking coins in, hoping the next spin's going to win.
Yeah.
And listen, if that's nothing wrong with that. Like, it's not my bag. It's not something I want to do.
Yeah.
And if you are doing that, at least recognize that that's what you're doing. Otherwise, you're tricking yourself. You're tricking yourself into your progressing in your crypto journey, in your trading journey. And actually what you're doing is you're just continually rolling the dice and hoping one of them's going to hit.
Yeah, exactly. Okay, so let's talk about what real investing actually looks like.
Well, first of all, they need a clear plan.
Yeah.
Because you know what? This isn't even a crypto conversation. This is just life.
Yeah.
This is business. This is work. It doesn't matter what it is. If you haven't got a plan, then you're just freewheeling it. And again, if you are one of those people that want to just freewheel it, that's okay. But at least recognize that's what you're doing.
Yeah. Because we talk about strategy quite a lot, don't we, on this podcast? Mm-hmm. And I think maybe that sounds too overly complex for people. So maybe if we can talk about it in a simpler kind of idea that people can use without thinking they're doing something formal. Because whenever we do anything, we probably plan out what it's going to be like. And sometimes with trading and investing, I don't think people really do that, especially in the crypto space where they see a token pumping and they want to be involved, so they'll just buy it. Mm-hmm. And I always think that you should buy something with a plan of what you're actually going to do with it if that progresses, or if the price goes down before you even buy it in the first place.
I've said this before, but we see it all the time. So people will buy something with the idea of it being long term, then they'll treat it like a short-term trade as soon as it goes in the wrong direction.
Yeah.
I see that all the time. It's really, really common. And they are two completely different type of strategies, because you would have bought it when you did if you were talking about a short-term trade. You'd have been looking at different technicals, different time frame, different everything. But quite often they will just, because they've got no plan, they'll just blur it. So they'll go, oh, I'm going to buy that. And hopefully that'll go up over the next year, 2 years, 3 years. And then because it hasn't done what they expected over the next 6 months, they'll abandon that strategy.
But do you also think that you see people buying coins and tokens as if they are all the same thing. And what I mean by that is if you were going to buy one of the big coins, if you were going to buy a Bitcoin or an Ethereum or an XRP and your aim is to hold that for the next 10 years, there's going to be a real chance of appreciation over that time. But then you see other people buying crypto and then they just buy it and think they're going to hold, when actually that might not be the strategy for that coin.
You mean with the low caps and stuff?
Yeah.
Yeah. I think that's just a knowledge gap for some people.
Yeah.
So if you notice recently when we've been talking to our community, I'll quite often be saying to people, and in no uncertain terms, it's a long-term hold.
Yes.
This is a short-term, get in, wait for it to go up, get out.
Yeah.
Anybody that's still holding it, when it goes down, you
Or
waited too
holding.
long.
Yeah,
You waited too
exactly,
long. This
yeah.
is a couple of weeks, a couple of months maximum.
Yeah, because that's about defining your risk, isn't it, on what you're buying?
Yeah.
Because yes, crypto is the riskiest of the risk assets, but there is also riskier cryptos than other cryptos. So
Yeah.
you've got to kind of define your risk before you're even buying. If you're buying something that is a low cap, if you're buying a meme coin, you can't anticipate that you're going to hold it like you would for one of the large caps. It just doesn't make sense.
No, unless it's one of the massive memes, like a Doge or a Pepe.
Yeah.
But they're like super memes now, aren't they? They should.
ETF
I've said this so times. They need their own category name.
Yeah.
They're no longer me. I know they are. It's basically a frog. That's
Yeah.
all. That's all it is. It's a picture of a frog. That's all. That's all Pepe is, right? But they've got their own thing going on
As
now.
a completely diversification from what we're talking about. When I was on Bitchinix yesterday, did you know that the little slidey bar on Bitchinix, if you're doing a Pepe trade, has got the little frog on it?
No, it hasn't. I still remember the first time that when we was on TradingView, we was on a Doge chart, and the dog went across the screen. You were like, "What's going on? What's that?" I was like, "That's the Doge dog." She's like, "What's the Doge dog?" You loved that.
I did.
I think we need to talk about patience as well, because people don't have enough patience, and I think that patience.
I feel like that's me
Okay.
sometimes.
I mean, I wasn't going to point any fingers. I wasn't going to point any fingers, but some people don't have enough patience, and I think that is probably one of the most underrated skills that you need in crypto.
Yeah, doing nothing.
Doing nothing is a thing.
Yeah.
It literally is something that you can do that is productive
it's
sometimes.
Part of your strategy, it has to be,
Yeah.
doesn't it? It does. And it doesn't matter whether that's patience over 5 years because
Mm-hmm.
you've bought some spot and you're going to hold it, or you've put on a trade, or you're waiting for an entry. It's all the same, and it has to be part of that strategy, because it's so important. And even if you're going to buy spot, look at the charts. How many people buy spot and they don't look at the charts? And for me, it doesn't really make sense. Yes.
Unless you're DCAing. So if I turn on a DCA on a daily purchase, I don't look at the charts.
Well, yeah, but what you do is you look at the fear and greed index.
Oh, okay.
So you're not going to.
So I've got a confluence.
Yeah, exactly. So your DCAing method is you buy in fear and extreme fear, because you said to me the other day, I'm going to turn off my.
We dipped above it, it went back to normal.
exactly.
Although we're back in it again this morning.
Yeah.
I haven't turned it on yet. I'm going to see what happens in the next couple of days.
Yeah, but I mean,
Although,
that's
by the way,
still
looking at the charts, I think it's coming down.
So I think so too.
I don't want it to, but I think it is.
I think so too. And if I'm honest, I've made some videos on YouTube over the last couple of weeks to try and say to people, I think that we just need some caution and some care in the markets at the moment, because just because everything is looking green doesn't mean that it's going to stay looking green. And I'm not sure that we're quite there yet. There's still too much tension in geopolitics for us to have enough conviction, I think. Yeah.
Totally. I mean, going back to what we were saying earlier on about people and they're having patience, I think the truth of it is real investing is actually sometimes really boring. There's no dopamine rush from it.
No.
Because you might buy something and then you are going to hold it for years.
Yeah.
There's no dopamine rush there. And I think...
Well, you don't get any dopamine when you invest in an ISA, do you?
No.
And it's
No,
very
it's the
similar
same.
to that.
It's the same.
Yes,
I
the
think-
risk is more, but actually
Even
the strategy
sometimes...
is the same.
You know what? Let me ask you something, right? And this is not pre-planned because you don't know I'm going to say this. You at the moment are testing out a brand new strategy for day trading.
Yeah.
Don't need to go too deep into it
Yeah.
on here. You are repeating the same method over and over again about 30 times a day.
Yeah.
Is it slightly boring?
It's incredibly boring.
Okay. Yesterday, how many trades did you do?
I did 19 trades yesterday.
How many lost?
4.
Okay. So your boring day was successful.
Yeah.
But a lot of people don't see that.
Yeah.
What they'll see is you go on social media and go, rah, 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 I've got an X percentage win rate today. I've had a great day. Woohoo. What they didn't see was you sat at your computer like this. I saw you with your face squashed against your hand, looking like you're losing the will to live because you've still got another hour and a half to wait for these candles to go before you can enter your trade.
Yeah.
They're not seeing that.
No.
It's really boring.
Yeah.
They're only seeing the excitement of what people are saying. But the truth is, it is boring.
Yeah.
It is boring. Now, I combat that boredom by filling my time with other things throughout the day, whether it'll be in between my trading, I'll go and make a video, or maybe I'll go on the motorbike or whatever it will be. So I combat that because I'm actually, once I get bored, there's a problem because my brain does crazy things when I'm bored. But I watched you yesterday. The reason I'm asking is I saw it yesterday and you looked bored to tears. Yeah, we get to the end of the day, I asked you how you got on. I'm like, you smashed that out of the park.
But was I excited?
I don't know. You tell me.
Well, so I got to the end of yesterday and I was just bored.
Yeah. And you looked exhausted as well from it.
And I was just, really tired. But the reason why I didn't go and do something in between those trades was because you have to work with your own limitations, don't you? Mm-hmm. And if I think about doing something else and then I do it, then I forget about the thing that I'm supposed to be doing. So I'm not very good at going back to what I was supposed to be doing.
A bit like Dory and Nemo.
A little bit.
Right.
Little bit. So I have to be invested in what I'm doing, and then it'll have my full attention and my full focus. And although it was boring, it was successful in what I was doing. So yeah, you have to work with your own limitations.
Do you know how you stop that being boring? You'll stop getting boring when there's more margin on that trade.
Absolutely.
Because all of a sudden, at the moment, you're cracking a brand new method that you're using. Yeah. In conjunction with another person from our community, right? All of a sudden, once you've done weeks and weeks and weeks of this, and you start increasing the margin, all of a sudden it'll be a little bit less boring watching that chart when you've got 10 grand, 20 grand, 30 grand on a trade. Does that make sense? Because at the moment, it's not that situation. They're much lower margin because you're testing out a new theory, right? Now, the theory is working. Once that margin increases, all of a sudden that boredom is out of the window. But then it starts to get serious, isn't it?
Well, yeah, because then you feel something different because all of a sudden the trades that you were doing and being successful at have got more pressure because the margin's bigger.
Then what do people normally do when they'll test out at lower margins? They go to decide to put more money on. What's the number one thing they do? They change the strategy because they shit themselves. And the amount of times I speak to people, they're going, what happened? Like you've just had a week of unbelievable stats. What happened this week? Well, I changed it a little bit because there was more money on it. I'm like, what are you doing? Just stick to what was working.
And then, I mean, that goes back to the question about the podcast for today. It's about entertainment then and not about investing, because your investment strategy was what you were using and it was successful. And then all of a sudden that changes, doesn't it?
And I think if people are using crypto as entertainment, I think there's also some things that we need to voice here, which is, it's an expensive entertainment, right? I mean, you've got exchange fees, for example, right? If you're literally putting trades on for the sake of it, well, go and add up those exchange fees. They add up pretty rapidly. That's just one thing.
Are you actually increasing your P&L? That's the thing to be looking at, isn't it? Because the balance of your trading account to be successful at investing should be going up. And if all you're doing is breaking even because you're paying your fees or actually you're not even doing that, then I mean, the exchange fees are considerable, especially if you're using high leverage.
And then if you are starting to lose trades because you're not doing it properly and you are literally just chucking any trading because you feel like you should trade now because you've decided you wanted to put a trade on at 10 o'clock, even though you're not looking at charts or anything. What emotional toll is that going to have when you keep losing? All of a sudden you think that you're not a very good trader, and actually you were never trading anyway. You were just gambling.
And also I think the thing that people get wrong sometimes is that you can have a really great strategy, but the market conditions can change. And if you don't sometimes adapt your strategy to market conditions, then it might not be the strategy. And I think there's always more things at play. But to have parameters of what you're looking for and parameters of things that you do and rules that you follow, that's a really good starting place.
Totally. I mean, I'll be careful how I word this, because if there's somebody in our community that said this, and I don't want to think I'm poking at them, but when they said it, I was a bit like, we just charted out an entry for something. And I was like, is anybody going to go in on this? And they were like, I was going to, but I've already put a load of trades. And fair enough. What trades have you put on? They told me. I was like, what made you put that on? They went, oh, just had a guess.
Just okay.
So like they'd missed out on a decent trade because they just had a guess.
Yeah.
And I didn't have it in me in that moment. It was when the dog wasn't very well.
Yeah.
I just didn't have it in me. I had no energy to say to him, what are you doing?
Yeah.
But yeah, I think that's the thing, isn't it? Again, that person was treating it like entertainment.
Yeah.
They weren't thinking about investing.
Because I think the other thing that you hear people say is that they like to trade and they're going to use that bit of money because I don't go down the pub, I don't have a drink, I don't go and do this. That's my thing that I like to do. And that's okay if that is your plan with crypto, to just use the money for your normal and the things that people would spend their money on to entertain themselves normally, and that they're using that in crypto. That's fine, but that's never going to.
There's no longevity to that. They'll burn themselves out.
Yeah,
they'll burn themselves out before they think it's not a good spend.
Yeah.
And then they'll then take to social media and say that trading doesn't work.
Crypto's a scam.
Yeah.
I had that this week.
The market fucked me over. Did it now? Did it now?
The market targeted you, John. Whatever your name is.
It didn't, though, did it? It didn't.
Yeah, I mean, people do get emotionally exhausted. They miss real opportunities. I mean, that was a real opportunity that you were talking about there, because if you're using all of your margin on random trades and then you've got no margin left to actually invest in good opportunities, then they're missed, aren't they?
Yeah, 100%. And as we said, then they'll start saying the market was against them, and it wasn't. It's because if we go to that particular example, they were too busy putting on trades because they felt like they should do, and then not putting on trades that was obviously been well thought out and planned out.
Yeah, definitely. You're not losing because the market's hard. You're losing because you're playing the wrong game.
Yeah, and it is a common thing. But I think you need to go through that to work out that just randomly putting trades on doesn't work. Yeah. Sometimes I think you need a punch in the mouth to know it hurts. Do you know what I mean? I think you do. I think some people need it, don't they? And if the exchanges are going to give them that punch in the mouth to realise, oh, that wasn't very nice, I think that might be your lesson.
Yeah.
And I think we've all done it.
Yeah. Yeah. And actually, you're going to feel it not only in your pocket, but you're also going to feel it because you're going to feel like you're a bad trader. You're going to take it personally because, unfortunately, as a retail trader, we know that 90% of our success comes from our emotions.
Absolutely. By the way, I'm not trying to crack on here that I'm perfect.
I thought you were perfect.
No. So, I mean, I will quite regularly, if somebody in our community says, oh, I'm going to go on an XYZ, I will just do it without checking. I do it on a regular, but I don't go and put loads of money on it.
Yeah.
Do you know what I mean? Like if I'm normally putting XYZ on a trade, well, I'm only putting ABC on the trade because I'm not checking it myself. But what you'll find is quite often people that are inexperienced, they will literally just put the same amount of money on every single trade, and it's just like a scattergun approach.
Yeah.
Like there's no control of margin there. Like I'm protecting my capital. I'm just taking a bit of a punch. For me, that's no different to me going being walking past the bookies and saying, "Do you want to put a tenner on a horse?" I know nothing about horses. I don't even like horses. They scare me. They've got big teeth and lips. I don't like them. But would I just randomly throw a tenner on? Yeah, I would. And there's no difference. But at least I understand I'm doing that.
But I guess also you've got the element of within the community, you know, people that are more successful traders and people that are have more experience of reading the charts. So you're not just taking a random punt, because there would be some people in the community that would say, I'm going to go in on this trade, and you wouldn't know
I check it. Yeah,
so again, like you have got that you're making a more informed decision.
So obviously on that we know in our community who's a charter, who's a trader, and who isn't. Right? Of course, I do understand that. What I'm just trying to say is, though, even I sometimes take a punt. That's what I'm trying to say.
Well, the truth is that trading is exciting. You have these market moves, you see these opportunities, and especially when there are a group of people that are all talking about successes, you want to be in that buzz. You want to feel it. And
I think that's okay. So we're talking about like that stimulation of people, but I think that's okay as long as you're picking up what their journey was, not just thinking that they're just randomly picking tokens and they're winning. Because I promise you, everybody successful in trading or crypto has put time in and has probably made loads of mistakes, then learned from them, then adjusted, then made themselves better. So as long as you're understanding that they've been through a journey as well, which is why I often will highlight mistakes I've made. I'll often do it because I don't want people to think that I'm some genius, because that's not the situation. I've just really tried hard, and I've really gone through the pain. I've done multiple cycles. I've made mistakes. I've had heartache, and then I've had successes. Then I've made more mistakes again. Then I've had more heartache. Then I've had more successes. And now I have more successes in a row.
Like selling your Bitcoin. When
Please don't mention me selling my Bitcoin on the podcast again. How many times have we got to talk about it? We don't talk about selling Bitcoin in here. Okay? Ever again on the podcast.
Well, I mean, I'm really pleased that you learned your mistake from selling it the first time.
I'm second. I'm second. It was twice. It wasn't once, it was twice. It wasn't once, it was twice. But the third time, we learned from the mistakes. And we, as Trump once said at that press conference, never sell your Bitcoin.
Especially when you bought it on, what was it, Mt. Gox or something?
Yeah. That went bust. That took a load as well. Yeah, I could have retired many families from that lot.
But we don't talk about that.
Thanks for bringing that on, though. Awesome.
But I guess, again, it's about highlighting the fact that you've had to walk a path, haven't you? And yes, it hurts. And I think this aspirational dopamine hit that people want, it doesn't, that's the complete opposite, and that feels awful. And I think when people are in those situations where they make those mistakes, one of two things happen. They either learn from it, or they go, I am never getting involved in that again. I'm out. And I think it's interesting because actually we've got crypto, and because it is so exciting, it moves so fast, there's such great opportunities. I just wonder if the research piece is sometimes missed by people, because you wouldn't randomly just go and buy a financial product off the shelf that you don't know anything about if you walked into, I don't know, a broker or something. Like, you're going to research that more. But when it comes to crypto, it's so easy to buy stuff that people tend to just do it.
Yeah, you do that.
And
they'll see a video, somebody will say token X is amazing, buy it now, and they go, okay. Yeah. But that is crypto, though. You can't get away from it, right? So it is, in crypto, attention is everything. And attention is created via narratives and social media. So those two things, the narrative and the social media combined, does influence people to go and buy and sell. And actually, I don't think that's a terrible thing. But as long as the people that are taking that information and processing it and deciding to buy are just putting another layer of responsibility on themselves. We always say it, do your own research. But how many people really do their own research?
And that's what I was going to go on to say, because I think that people expect that the people that are making the videos have done all the research, so they don't have to.
Well, I try. I do my best. But we know there are bad actors out there that will literally just say anything for a few quid. And that's okay as well, because that's got its place. Like, do you know what I mean? Like, down in the meme coin world, it is what it is. There's a whole industry built off that. It's not really my bag, as everybody knows. Do I like a dabble in the meme coins? Occasionally. Do I make content on it? Absolutely not. But that's okay.
Yeah, exactly.
As long as you take it for what it is and you understand what that end of the market is, then you can navigate it and have a bit of fun. It's if you're consuming this content and thinking, oh, okay, that's really good financial advice. Well, it isn't. There's no good financial advice when it comes to meme coins, in my opinion.
Do you think that people actually look at crypto as investments, or do you think they just want to be involved?
I think probably at the beginning, I think probably people buy crypto at the very beginning because they're thinking, oh, this could be something for the long term. Then they probably transition into just making random purchases as and when, because they've consumed in so much content. And then I think once you burn yourself out with that, if you survived and you're still in, then you start thinking long term again. I've basically just described my own journey there.
If you survive.
By the way,
If you survive, And that's I guess that is the crux of it, really, because so many people just don't survive that, and they don't get past that first loss or the first bad mistake that they've made, and that's probably about your own emotional resilience, really.
So I think we'll get into this, if we're being honest, that a lot of people aren't just here to invest; they're actually just here to take part, because they haven't quite got their head around the fact of the investing section yet. They're literally at that scattergun approach, and I think that's quite normal.
Or I'm going to do that because it feels good. I'm going to do that because it feels good.
But everybody does it. I've definitely been through my phase of that. I think it's not until you've had a bit of miles on the clock that actually you start getting a bit you get a bit of a shield onto some of that.
Yeah.
I still get excited.
Yeah.
Like I saw a token. I don't want to say which one actually, because I don't want to pump it. But I saw something the other day, and it literally was just a tweet. And then about 20 minutes later, I saw somebody that I think's credible make a video about it. And I was like, oh, that's interesting. I went to go and have a look at it. And I very nearly went and bought some without actually going to do any more research. I whoa, slow yourself down, Matt. So I nearly just did exactly what we're describing. I went and had a little look at the project. It looks okay. And actually, I bought it. I'm not going to mention which one it is here, but I bought it there and then. Bosh, when I did a little, not crazy, but a bit of a spot. See how we go.
So what can people do to avoid this entertainment trap? What do you think has more longevity?
If you're the kind of person that needs that dopamine rush, but you don't have time to chart and you can't actually day trade, right? Let's face it.
Not everybody can.
Not everybody can, right?
No.
Then you need to find something in the middle ground, right? I would suggest something that might be able to be a solution for some people, might be a trade automation.
Okay.
Because you're still going to get that buzz of when it fires.
Yeah.
You're still going to get that buzz of, is it going to fire? Isn't it going to fire type of thing as well. So you've got a bit of a build up to it. You're still going to have the buzz of it closing in a profit. And you're also going to have the reality of when it doesn't. So you're still going to get that whole cycle, but you haven't got to put the pressure on yourself to make entries yourself.
Of watching the charts.
Yeah. Because if you have a decent automation, I mean, not here to pump it here, but we've got our own automation in the Wolfpack, haven't we, right? The Wolf Trade automation, right? Now, that there is going to fix that for a lot of people.
Yeah.
They're still going to get the buzz of the trades. They're still going to get the win, still going to get the occasional loss. They're still going to get the hype. They've still got a community there they can talk to them about it and post, oh, I had a win today, I had a loss, whatever it will be. But it's going to take the pressure off them trying to find their own entries and making absolute disasters.
Yeah.
I think that could be a solution. It's not for everybody, by the way.
Yeah.
But I think that could be a solution for some people.
But I think just having a bit of a self-check and just knowing, do you have a plan or do you react to the information that you see out on socials? And where do you sit in that? If you aren't going at something with a plan, maybe that's something that you can implement. Do you track your trades? This is one that I think is actually really important because a lot of people never go back in their order history and actually look at
I don't know if you know this, but every night before I get into bed, I go through all my trades of the day. Did you know I do that?
I didn't know that, no.
Yeah. So I actually, to make it quicker, because I remember the trades, because I don't do hundreds of trades a day.
Yeah.
Okay, I'm trading Forex at the moment, and that's a lot going on. But forget about that. When I talk about crypto in particular, there's not that many. If I've done 20 in a day, that's a lot for me at the moment, right? Quite often it's a lot lower than that.
Yeah.
And I will literally just go to the overall position history after fees, and I'll go and look at every single one. I'll think about it, every single one, and go through it. And then okay, where did I get that one from? Is that one I did myself? Was that a signal?
Yeah.
We did that get that as a tip from somebody inside the community? And I'll look down it. And if there's a pattern, I quite often will drop something.
Yeah.
Quite often.
Yeah. Yeah. And then also, are you consistent or are you just emotional? Because the other thing about particularly leverage trading is that the minute you see that reversal, it feels horrible. And are you just exiting trades when actually you needed to just stick to your plan? What was your plan when you got in? What were you hoping to take out? Where was your stop loss? Where's your take profit set? If we were looking at how we can fix this, being practical, reducing the noise that is around you. If you have got loads of creators that are out there telling you all different messages, or you're in a community that's perhaps not very successful or not very positive, I think
or a lot of input.
Yeah, exactly. Just reducing that noise, creating simple rules for yourself and actually following them. Because it's all right making the rules, but are you really
and simplify it.
Yeah.
If you're relatively new, simplify what you're doing.
Yeah.
Don't you do not need 10 different indicators on your trading view, right? If you've got more than 3 things on your trading view and you're new to crypto, it's pointless.
Exactly.
Because you are never going to be able to use all those quick enough.
No. Definitely
You're not.
And trade less, but make better decisions. So think about what you're doing and execute it better. Don't do more. Get what you're doing right.
Yeah.
And then you can scale that up.
I'm a big believer, especially new people. Once they start putting higher margins on with lower leverage, things start to click.
Yeah.
Because when you've got a higher margin, it keeps your attention.
Yeah.
In other words, more money on the trade.
Yeah.
When you've got lower leverage, it's giving you more room.
Yeah.
Yeah. So if you've got a couple of grand on a trade, it's 3 to 4x, right? All of a sudden, you're less likely to go bust overnight.
Yeah.
Obviously, it can happen. It's crypto, right? But it's very unlikely, right? Especially if you're talking about the big boys, XRP, Bitcoin, Ethereum, Solana, any of those, okay? But it also means you're going to be focused on that. And you might not only need 2 trades on.
Yeah.
Instead of having 10 little ones on, put 2 big ones on.
But also,
but low leverage.
If your low leverage, high margin trade is getting to 10, 20%, because it's high margin, you're going to have higher profits.
Yeah.
So you don't need to go for the moonshot.
No.
You don't need to wait for it to go to 100,
Nope.
200%. You could be very happy with closing your trade at 20%.
But quite often what new people do is they'll go and put $10 on at 100x, thinking, right, let's go and turn that into 100 quid.
That's entertainment.
Then it becomes entertainment.
Yeah.
They'd have been instead of losing 20 trades like that, they'd have been better off in the first place to go and put $1,000 on, finding themselves a decent entry, putting $1,000 on a 5x and waiting it out and letting that ride for a month.
Yeah, absolutely.
Way better.
Absolutely. I mean, the reality is crypto will happily entertain you for years, but it only rewards people who treat it seriously.
Yeah. I think, but yeah, in my opinion is you can't tell somebody to do that. They need to learn that themselves. They need to go through the pain. They need to make the mistakes. Me too.
Yeah, absolutely.
Like I had to go through it. You had to go through it. Everybody does. Everybody does. And anybody that tells you that they were fantastic, they were like the world's best trader the day they started, they're talking shit, man. They're talking shit.
Yeah, I mean, so I think the question isn't whether crypto works, it's what are you actually using it for? And I think there's probably a lot of people that are going to be watching the podcast, and really, I do hope it resonates, because yes, I think there should be an element of your portfolio, an element of money you put aside for a little bit of fun. But if the entire money you're investing in crypto is for fun, then who are you really doing this for?
And make that decision.
Yeah.
Is this a gamble? Yeah. And if it is, that's okay, as long as you've recognized it. Or are you trying to trade and are you trying to invest? Because if that's what you're doing, but you're treating it like gambling, you're never going to achieve what you want.
Yeah, I think that's a really good way to end our podcast. Thank you guys so much for watching. Remember, weekly episodes drop on YouTube and on Spotify every Friday, 7 p.m. And if you're not already following the podcast, give it a follow.